Hey guys, I know some of you have requested that I do a live trading session, but this is as close as I can get to a live trading session. As you can see here, I've got gold open, the chart for gold that is open here, and I am entering some buy trades on it. Now I'm going to explain in a moment why this is so, and I'm going to explain my analysis based on two different theories, and then you can see why this particular trade has been taken and what's the exact reason for why I'm taking this trade. All right, okay, so let's talk about trading on a Monday. All right, today is Monday, and mostly the market is moving sideways on a Monday. And there's a reason for this. You will understand that most institutional traders, when they're trading on a Monday, they are looking at the volume of the market. They are looking at the general sentiment of the market. So they're looking at the aggregate buys and the aggregate sells, and then they will introduce volume when there is a particular direction that the market is favoring. So let's say there's more sellers than buyers in the market. The institutional traders will then introduce more volume in such a way that the market will actually go in the opposite direction. So I will show you right now via the 15-minute chart why I took this buy trade. So if you look at the chart, and you can see here, this is the lowest point that the market reached today, and then we have the highest point that the market reached today as well, which is that. You will see that the highest point that the market reached coincides with the high of the previous week. Now, because of this coincidence, or this particular high that has been hit, many people will assume that the market is going to go down, because obviously if that is the high of the week and there's a retest of the high of the week, then we expect the market to go down. But that is not the way the market will move, especially on a Monday. It means more volume has been generated going downwards, and therefore the institutional traders will introduce more volume down here so that the market will start buying. So this is one of the ways. This is just one of the many ways in which you can check, right? Otherwise, I'm going to plot a couple of moving averages on this chart just to show you what other way there can be to check where the market is going. So I'm going to go here to my indicators, and where are the moving averages? Trend, all right, indicators, trend, moving average. So these are the moving averages that I use for my trades. I'll start with the moving average 7. I'm going to make it a little bit thick, and I apply it as an exponential moving average, and I apply it to close. Okay, so that's an okay there. And then I will again go to moving average 23. There is 2, right? 23 exponential. I'll change that color to yellow. Okay, and then I will have the 92 moving average. Okay, moving average again. 92. I'll make that aqua. Okay, and then I will have my 365 moving average. Oops, wrong color. Let me change the color there. Alright, so these are my moving averages. So when you look at a chart, right, and you have a couple of bounces onto the moving average. So the first bounce here we can see is on the 365 moving average, right? That was the first bounce. The next bounce is on the 92, and this happened twice. And then the market came back down but bounced on the 23 moving average, right? And it did that twice. Now this is the third time that the market is bouncing on the 23 moving average. So if you can see, we have one bounce to the 365, we have two bounces to the 92. Therefore we're supposed to have three bounces on the 23 moving average. That's the reason why I am entering this buy trade over here. So we have one bounce, two bounces. Now this is the third bounce. So we wait for the market to go up. If you then go to a higher up chart, or let's say the 4-hour chart over here, you will see that we have a proper setup here. We have the 6 and 23 crossing, and then they get into, okay, let me make this a little bit thicker. I want to make this trend line a little bit thicker. Alright, visualization, common, okay. Make it a little bit thicker. Alright. So there we go. We have the cross that happened, the 7 and 23 cross, and then the 7 and 23 getting into the 92. That is a symbol for level 1. So level 1 goes up to here, and then the market comes back and bounces on 92 moving average there. That is level 2, and then that is level 3. So we have got the 3 levels have already been completed on the 4-hour chart. Now after those 3 levels, we are expecting either a drop or a peak reset. Now in order for you to see a peak reset, you have to see an M followed by a W. So let's go to a lower time frame. Right, let's go to M15. As you can see, M15 has an M, which is this M over here, followed by a W. So when you see an M that is followed by a W like this, let me just show you. There we go. This is your M there. And the M is followed immediately by a W, which is this over here. When your M is followed by a W, it's a peak reset. And usually what happens with a peak reset is that the market will come and bounce on the trend line that is formed by the M. Which is there. So this is the reason why this trade here is a good buy trade. If you are going to set a stop loss for this trade, you would have to set your stop loss on this moving average here, on the moving average 92, which is at which price 2077. So 2077 will be your stop loss. So your entry is 2082, your stop loss 2077, which is 50 pips below the entry, and then your take profit would be equivalent to 1/3 of the previous ADR, or average daily range. So the average daily range for this day, if I am to use my crosshair from here to there, the average daily range there was 484 pips. So if you are going to set a take profit for this one, you would have to calculate 1/3 of 484, and that's equal to 145 pips. So from where we are now, 145 pips would be, right, so from the entry 2082, 145 pips, it's around 2097. So we can put our stop loss on 2097. And then so our take profit on 2097, our stop loss on 2077. So those are the 2 points. So what I'm going to do is I'm going to go to my trading view and just show you we are entering a long position there at 2082. Let's see, 20 to 2097. Then stop loss 2077. There we go. So this is our trade over here. Let's see. So I'll come back again with an update of whether we have hit the stop loss or we have actually had a take profit hit. But this is 2082. Right. So that's our trade over there. Let's just wait and see what will happen. Like I said, guys, this is as close as I can get to a live trade. I understand that some of you want me to actually do a proper live trade, but that would be demanding of me. I need to be coding some of the tools that I need to be coding for you guys. So all the best, and I hope this will suffice as a form of a live trade.